Well, Happy New Year. It's January 2026. Brian Bogner along with Greg Towner, and we're here to talk to you about the markets. This is our 20-minute market breakdown where we share with you what's really happening, what you really need to be paying attention to, and we discuss here in less than 20 minutes. Greg, Happy New Year to you. How you doing?
Hey, doing great, Brian. Thank you.
Awesome. Well, of course, just no surprise. We started the year here quite with a lot of things happening, and of course, right now, as this is being recorded, our president is trying to purchase Greenland, and there's threat of tariffs, and there's a lot of headlines, and there's news, and they're meeting, and they're talking, and there's deals going down, and then of course there's the Venezuela thing, and there's just a lot of things happening right now
Yeah.
that obviously bring uncertainty and concern into the markets. Um, Talk to us. I'm curious. I'd like to hear your opinion on why does this really matter? Is this something we really need to be leaning into and looking at right now?
Yeah, I mean, if you look back over time, there's so many different things that happen that come up
Hmm.
that feel really important at the time. They move the market, they move things in our head, just emotions. But in hindsight, they don't necessarily mean that much in terms of financial markets. So let me
Right,
just name just a few things. And these are just over the last few years.
right,
Of course, we had the Russia invasion of Ukraine, caused a lot of market volatility. The Israel-Hamas conflict. You may recall, or you may not recall at this point, the U.S. credit downgrade last year, one of several. A couple of years back, we had the whole Silicon Valley Bank thing and some banks failing. Less than a year ago, we had the Tariff Liberation Day in April,
right.
I believe it was.
Yeah, and the yeah, even though
Yeah,
even though that market tanked, right? I mean, it went down hard, right? We ended the year what? Up.
Positive. Yeah, real
Yeah,
strong year. And
yeah,
so, I mean, there's all kinds of things over time. That's just the last few years. You can go back over history and half the things, and most of us wouldn't even remember that were impacting the markets. You mentioned Venezuela and Greenland here recently. All of these, I don't want to just say they don't have any impact. They can have some impact, but most of it is short-term in nature.
hmm,
And more often than not, it happens when the market just is kind of looking for a reason to pause. Maybe there's been some stretch sentiment or it's had a good run. So it isn't so much that the news itself that is impactful on financial markets. It's kind of positioning of the market maybe isn't well positioned for any kind of headlines at that point.
right, right. Um, so okay, we've had a lot of these events that are happening. Another question I've got for you, and because I've heard this a lot.
Mhm.
The market's been up 3 years in a row. Okay. We've had 3 good years. It's time for a correction. It's time for a down. It's time for this thing to, really give it back, give some of it back. What are your thoughts around that?
Well, yeah. I mean, I would say that in any given year, there's often and perhaps usually some sort of pullback or
Right.
correction, however you want to word it. I mean, we just referenced last April, which depending on what part of the market you're looking at, was kind of a 15 to 20% correction there. And then the market ended up strong. So you can always have a 5, 10, 15, maybe even pushing 20% pullback
Right.
and still have the market finish positively, if not very positively, for that calendar year. It's just inter-year pullbacks are very common.
Very common. Yeah. Well,
Yeah.
so let's talk about then what, as we enter 2026, what does really matter? What do we need to be focused on?
Yeah, I know we talk a lot about noise and this and that doesn't matter. Well, something has to matter, right? Like, there's something pushing this market up over the years. So let's talk about some of those things. And this isn't, an entire list by any stretch, but I would say at the end of the day, what the market really needs to be sustainably moving higher is earnings growth.
Yeah.
And we see all the time, what is the estimated earnings growth for the market for this year, for stocks this year? I mean, right now for this year, estimates are for the S&P earnings to grow kind of low double digits. So that would be really nice. And that just kind of sounds abstract and people might not really realize what that means or think about it. But picture it this way. Let's say you're a small business owner and you're focusing on the earnings of your company and you see that your earnings are growing, 10, 12, 15%,
Mhm.
regardless of all this noise around you, political wars, what have you. And you're like, oh, hey, I'm doing pretty well. I think my company's going to be worth more this year because I'm
Mhm.
growing by
Right.
15%, let's say. So think about that in context to the market. And that is why earnings growth is so very important.
Yeah. Yeah. All right. So earnings growth matters. What else?
Well, I mean, tied right into that, it's just kind of profit margin. So if you're earning this money, you have good sales and so forth, how much you're able to keep. And so if you think about the US economy over the last, multiple decades now, it's really transformed to a lot of more manufacturing based, to a lot more service and technology based. And what that's meant is companies are much more efficient. And so they keep a lot more of their money that they're
Right.
making. And I think you're going to see that with the advent of AI be even more efficient in some ways. So that is why I think, and others have commented on this, the high valuations that everyone talks about in the market. I'm not saying the market's cheap, not by any stretch, but you can justify it a little bit where companies are much more profitable now than say 10, 15, even 20 years ago.
Right. Right. All right. So companies continue to grow their earnings. The profit margins are still doing well. I mean, the reality is companies are still making money, you know. Um, well, we've been talking a lot about a lot of these short-term events, these short-term, noise and things like that in the market. So, I'm going to assume that one of the things that really matters is having that long-term focus, right? Talk to us a little bit about that.
Yeah, so we talked here now about what matters for the market itself, but these next things that we're going to talk about are really less so about the market and more about the individual investor. And that's, like you said, having a long-term focus because we're looking at a study from JP Morgan going back to the late 1980s. And on any given day that the market is open, it's essentially a coin flip as to whether the market's going to be up or down, right?
Right,
No one knows.
right,
But as you go out just a little bit in time, over a given 1 year period, 82% of the time the market's going to be positive. 5 years, it's 87%. And over 10 years, it's 93% of the time. So a
mm,
huge benefit to having that longer term focus rather than letting those shorter term noisy events that we talked about earlier driving your investment decisions.
it's amazing too along those lines is I mean, when I think about these headlines that we just talked about earlier, and at the time, just all of the intensity, right, of these headlines coming at us and getting emotionally involved and really being worried about it, and yet a few years later, looking back on the headline and being like, well, yeah, that happened,
Right.
right? Right. And that, I
Exactly.
mean, that's exactly your point of having a long-term focus. That's not going to change next month, next 6 months, next year. There's going to be more of these headlines coming at us for sure.
Yeah, absolutely. And so, the next thing that I think really matters, and several of these are going to tie in together, but having an asset allocation that really matches your personal time frame and your
Hmm.
risk tolerance.
Hmm.
Everybody is different in different ways, not
Yeah.
just in age, but in what their goals are, how much volatility they can handle.
Yeah.
Some people just assume, oh, because I'm young, I need to be all stocks, or
Right.
because I'm older, I need to
Right.
be super conservative. There's a lot of different factors. So really hone in on your proper asset allocation.
Right. Right. So if we're talking about asset allocation, I'm assuming we're going to talk about diversification as well, right? So your asset allocation and your diversification in terms of how diversified you are amongst asset classes.
Yeah, and I'm actually going to take a little twist on it here, though, because
Okay.
everybody, talks about diversification being, the most important or the most basic thing in investing, and it probably is. But instead of talking about it from kind of a risk management standpoint, which it is important, I'm actually going to look at it from more of an opportunity standpoint.
Hmm.
I think we both believe that markets rotate over time.
Right.
Different areas do perform really well. It's really hard to predict that though. And
Mm.
so if you're truly diversified, you're going to have exposure to some of those different areas and start benefiting from when they move because they can move quickly. And we've seen that here in recent months. International, after not doing well for a long time, finally Brian has done well.
Yeah.
We're starting to see value. We're really starting to see small caps. So all
Right.
these areas that a lot of people didn't want exposure to,
Right.
if you were just truly diversified, not only would it have helped you from a risk management standpoint, but now you'd be starting to benefit just from the opportunistic standpoint as well.
Correct. Yeah. All right. So as we talk, that's a great point. So as we talk about what really matters, um, let's also talk, if we're talking about the investor, right? Having a long-term focus, asset allocation, diversification. I do feel like we also need to talk about the T word, right? Taxes, right? What
Right.
matters there?
Yeah, because I mean, think about what matters. What matters at the end of the day is not, what the S&P did last year. It's how much money are you going to have to spend in, retirement or for your kids' education or whatever your goals are.
Hmm.
And part of that story, that end result is what you had to pay in taxes. And so
Right.
there's different ways that you can kind of work around that or minimize that in terms of asset location, what positions you have in different types of accounts,
Mhm.
what positions you own, tax loss harvesting, different things that can occur that you really want to minimize taxes because we think that is one of the categories that matters over the long term, not so much for the market return, but for
Right.
your personal return at the end of the day.
Right. Yeah. That's good. Yeah. I mean, a lot of times we do forget about, well, we all remember taxes this time of year as we
Right.
prepare to do our tax return. But sometimes when we talk about investing, that tax conversation can take a back seat and it needs to be present when we're talking about this.
Yeah.
I think, one thing too, I'd like to add what really matters here is just having a strategy too that you can stick with. I think that so many investors out there are really they're trying to time the market. They're trying to go in and out. They're trying to let their emotions dictate what they do. And so we see it all the time, right? When the market's going making new highs, we're getting calls like, I want to take more risk. I want to take more risk. I want to put more in. I want to put more in. I want to put more in. And then when the market's, has gone down and low and it's in the red, they want to sell and they don't want to be adding. And that's the time yet, right? So the average investor tends to do the exact opposite that they need to be doing at these levels. And I think what really matters is having a strategy that you can stick with through the good times and through the bad times. So when we talk about a long-term focus, when we talk about asset allocation, when we talk about diversification and minimizing your tax burden, that is what we're talking about. A strategy that you have that will help you stay the course during what you're, as you invest and build wealth. And of course, we're always here at Parallel Financial to help you with that. And if you need any help, just give us a call and we'll be glad to sit down and make sure that you're in that situation. So, anything else you want to on what really matters here that we've missed?
No, I think that was a great summary. You summed it up perfectly.
All right, well, good. Well, then, usually at the end here, we like to get into just a few recommendations. I'll start, and Greg, you can close us out. My recommendation, look, this is the new year and it's time for resolutions and we always take an evaluation and kind of, of where we're at and what we want to do and be and things like that. And so I just have two resolutions that I'm making for my life. And, if you find any benefit here, please feel free to rip and deploy with you as well. But, and they're not market related, but two of my big resolutions this year is one is to be present. And I know a lot of times when we talk about being present, it means like put your device down and be present with what we're doing. And I think that's an important part of it, but just going a step further and being present, meaning you just whatever you've got for today, give everything you've got for today. A lot of times we focus on the future, and it's kind of the same thing with investing too. We're focused on well, what's going to happen next week, or what's going to happen next month, or what's going to happen next year, or what's going to happen there. Well, let's be fully into where we are today because we know we've got today, and we know we need to be present here. So that, and the other thing for a resolution, I would say, is just relationships. As I'm 52 years old now. I think I'm still young, even though I don't look it. But what I have found out is that relationships in life are really, I feel like, more and more just the most important thing. And so, covet your relationships, engage in them, work on them, and cultivate them because having those relationships and those friendships, I really believe, really matter. So, I know we kind of took a little detour from the market there, but it is this time of year. So, I did want to just add a couple things there. But, Greg, go ahead and close us out.
Yeah, well, I'm going to kind of combine resolutions and the market because, I
Yeah.
think we're recording this kind of third week of January here. I think this is historically where people have already given up on their resolutions that they made. So
Mm,
I'm going to kind of have people reemphasize. So in our January viewpoint that we put out right at the beginning of the month, we asked investors to make a few resolutions that we thought would make their investing life and success more impactful. So there's three of them. Number one, this won't come as any surprise to anybody. Avoid the noise. Basically that's in general what we've talked about here today. I think everybody kind of knows what we mean by
hmm
that at this
hmm
point.
hmm
Number two was to look at accounts less often. Kind of goes hand in hand, but just
Right.
people, it's so easy to just look at your account at any given moment now. So look at it less often. I think you'll find your life less stressful. And then third one, it depend on where your life stage is. If you're still working and have the money to contribute to accounts, contributing regularly to investment accounts, a systematic process not only helps kind of smooth returns, but just is going to enhance your overall financial picture over time.
Yeah.
And then lastly, if you are retired and no longer working, I think it's, back to your point about a strategy you can stick with and the proper asset allocation and all of that, having an honest discussion, ideally with an advisor, but at the very least with yourself,
Hmm.
about what your true risk tolerance is. It's okay to admit that it's changed over time as you've gotten older, as you have more money, life changes, and so forth. Have that real important discussion. Do I need to change my asset allocation so that
Hmm.
I can handle and stick with things through the next correction whenever that occurs?
Excellent, excellent advice. As always, we're here for you at Parallel Financial. You know where to reach us, parallelfinancial.com. Give us a call if you have any questions. Happy New Year again, and we hope your new year is kicking off well, and we will see you next month.